Which is the better dividend stock to buy, CVS or Walgreens Boots Alliance? I'm going to answer that question in this video, comparing the two across several different financial metrics, starting with the dividend yield. So let's get right into it. Walgreens offers a robust 5.72% dividend yield. Meanwhile, CVS offers a 3% yield, which is about half of what Walgreens offers, but it's still a healthy dividend yield, especially when you consider that CVS has done an excellent job increasing its dividend payment over the last decade. The next metric I wanted to look at is revenue growth for these two over the last 10 years. And it looks like CVS has done a better job in terms of revenue growth ever since, let's say, 2019, ever since after it acquired Aetna in that massive acquisition. It did help boost revenue growth in that regard. And in the most recent quarter, CVS with 9.45% revenue growth was way ahead of Walgreens at negative 1.53%. The next metric I wanted to look at was their operating profit margin over the last 10 years, looking at the trailing 12-month average. You could see CVS has held superiority in this metric going back the entire decade, and most recently at 4.82%, ahead of Walgreens at negative 4.8%. But neither company is delivering operating margins that are robust or that are really strong. For an operating profit margin of 4.82% is not very strong. I guess for a in its industry, it could be considered okay, but you don't need to invest in this industry, right? You're not forced to invest in this industry. So, choosing to invest in an industry that can only offer operating margins of low single digits is not very attractive in my opinion. The next thing I wanted to look at is cash flow from operations to sales over the trailing 12 months. So this measures how good the companies are at turning sales into cash flow from operations. And in this metric as well, CVS is doing a better job than Walgreens, and Walgreens is headed in the opposite direction as it's investing in a new area of growth, in a new area of care solutions, whereas CVS made its major investment in acquiring Aetna in 2018. So it made its major investments here, and now it's experiencing the growth side of it, while Walgreens is still making its major investments. And who knows if that will turn into increases in cash flow from operations over the next several years. Finally, I wanted to look at their long-term debt because, like I mentioned, CVS made that acquisition of Aetna. It had to borrow billions of dollars, tens of billions of dollars to make that deal. It went from a long-term debt of around 25 billion all the way up closer to 70 billion. It's been paying down that debt ever since 2019, but still holds a whopping 52 billion in debt compared to just 11 billion in debt for Walgreens Boots Alliance. Finally, I wanted to look at their valuations to determine which one would be the best stock to buy, and they're trading at a similar inexpensive forward price to earnings ratio of 8.5 for CVS and 7.4 for Walgreens. However, if I had to pick one of these two stocks to buy, I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now. It would be CVS. I'm skeptical of the money that Walgreens is spending right now to expand in the care services industry. It's going to spend that's going to be expensive, and it's an industry that's not growing very quickly, so I'm not a fan of investing all this money in an industry that's not growing very quickly. So that's risky and not optimal in my opinion. Whereas CVS had made its major investments in 2018, 2019, making the acquisition, and now that's starting to pay off. So if I had to pick one of these two stocks to buy, it would be CVS. All right, so that's all I've got for this video. As always, I truly appreciate your viewership. If you like this video, I'm going to add a few videos at the end of this one that I did that I think you'll also enjoy. So please click on one of those and I'll see you over there.